So, having said all that, we're on to our next speaker, planning for future markets and opportunities. Our next speaker, Steve Kell, also comes to us from Ontario, and is here to discuss planning for the future markets and opportunities. Steve Kell has worked in the Ontario grain and feed industry for the past 33 years in all phases of the industry. As a farmer producing corn, wheat, and soybeans, as a country grain elevator manager, conditioning, storing, and shipping grain, and as a merchandiser, hedging and trading commodities. This has included 9 years in the co-op elevator system, 20 years as a trader at P&H in Toronto, and for the past 4 years as the grain merchandiser for Kell Grain, with 4 elevator locations spread across central Ontario. In addition, he also writes a column on the commodities markets for the Farmers Forum newspaper. Steve, the floor is yours.
Well, thanks, guys. It's good to be here. In my previous life, when I worked at P&H, I worked with the fellows at Smith Brokerage, so Wayne and Harold. I don't know how many of you remember them, but I was in this part of the world a few times, and I've recognized a few faces today, so that's good. We did a malt barley program down here at one point in history, exported a load of barley out of Halifax once, did some stuff. So it's fun to be back, and it'd be nice to make some acquaintances. Now, I spent my whole life farming. This is our home farm. It's in Innisfil, Ontario, so if you're in the potato business, that's about a 15-minute drive straight east of Alliston. If you're a hockey fan, it's right on Yonge Street, 155 stoplights directly north of the Hockey Hall of Fame. We have 4 locations, all kind of similar. Every year I buy between 120 and 130,000 metric tons of grain from neighboring farmers and what we produce on our own farm. We use about 8,000 tons of corn a year making pig feed, and that's not for sale, that's for our own pigs. And then we merchandise the rest of the grain that we produce. So thought I'd start off with talking about grain marketing, which is what I spend the majority of my time doing. And I think probably the biggest challenge we have as producers, and I farm as well, when we're trying to put together our marketing strategies is having a good idea of what the market may or may not actually give us, right? If we have good realistic expectations about what's there, then we're going to know when to contract sales and when to sit it out. So that's what I want to try and address as we go forward this morning. I'm going to talk about corn first. I was really happy to hear when I was out in the trade show that there's actually more and more corn growing in the Atlantic provinces. I think that that's a huge opportunity for this part of the world. But even if you're not in the corn business, corn is the #1 grain crop produced in the world. Globally, we produce about 1 billion, and that's billion with a B, million metric tons of corn a year in the world. So 1,000 million metric tons of corn. And so because it's the biggest source of starch carbohydrates, it's the engine that drives the bus, right? Wherever corn goes, the grain market goes. This is U.S. corn supply over the last 10 years from the last USDA report. And what's really important, all last summer we kept talking about, if you were on any of the crop grain internet feed, right? Everybody kept talking about how big the corn crop was, how big the corn crop was, how big the corn crop was. Well, it turns out not that big, right? It was actually 2024's corn crop in the U.S. just a little over 15 billion bushels, but certainly not stellar. And so it was a little bit to do with lower acres and a little bit to do with swollen expectations. We dialed yield back because of a slightly drier August, but it's not that big a crop. This is stalks. It's probably too complicated a slide, but the reality is we're burning through the corn pile very, very quickly. We used more than 25% of last year's production in the first quarter. And so either the price has to go up to the point that we ration demand or supplies are going to continue to tighten here. This is a little educational piece, and this is, especially if you're a long-term thinker in the corn business, but this is U.S. corn in terms of where it gets used. So there's, I think, 25 years across the bottom, but the dark orange part of the bar graph is feed. So that's the percentage or the amount of the U.S. corn crop that gets used to make livestock feed. The middle part, the yellow bars, is ethanol. And the blue on top is sort of the industrial corn demand. So things like sweeteners, starch, corn flour, those kinds of things. What is really important, if you look back into the mid-1990s, there's no ethanol demand at all. Then we came in with the renewable fuel standard. 10% of all gasoline is now ethanol, and that demand has grown and grown and grown to the point that, 40% of the corn in the United States is now used to make ethanol. And it won't affect the way we market our 24 crop or our 25 crop or our 26 crop. But if you're looking at making like $1 million investment in a corn dryer or something, you've got to really size up what you think of electric cars, right? Because there could long-term, I actually don't think it's a thing. I don't think we're going to be able to maneuver around liquid fuel. And just for fun, you look like a fairly redneck crowd. If you look at the amount of corn that's used for livestock feed and the amount of corn that's used to make ethanol, the one thing I personally don't like is vegans with an electric car. They're doing nothing for me. This is one of the reasons why corn values have shot up as much as they have here in the last... So corn values actually bottomed out in September, October, when we thought the crop was big, right? This is weekly ethanol production in the United States. It's measured in millions. So typically there are around 1 million barrels of ethanol a day. If you look at the last few months to the extreme right-hand side there, we're up to about 1.1 million barrels a day. So for some reason in 2025, we're actually using 10% more ethanol than we were a year ago. So clearly people are either driving around more or we gave up on electric, so that's really important, and it's one of the reasons why corn supplies are getting tight. The other thing, and this is important, especially in terms of like an Atlantic Canada perspective, this is U.S. corn export sales. We'll see if I'm smart enough to use the clicker here. This red line is sales of the 2024 corn crop. So it started off in the summertime where we were way below. So sales doesn't mean it's shipped, it means it's booked. So in June or July, you could be selling new crop corn for shipment in November, December. They were hardly selling any corn. The blue line and the green line are last year and the 5-year average. And so through most of the summertime, export sales of corn out of the United States were extremely slow. And the market was worried about what we were going to do with all the corn. And then we got into August, September, and all of a sudden it just took off. And if you look at weekly export sales ever since, it's continued to be ahead of average, ahead of average, ahead of average. So we're grinding through this corn crop extremely quickly. And so although it was an okay-sized crop but not big enough, like livestock feed demand doesn't change, right? If you have a 500 sow farrow to finish, you make pretty much the same amount of feed no matter what. If you're a starch plant and you're making starches or sweeteners, you run same speed all the time. But export sales has the capacity to grow and to just suck the surplus right out of the marketplace. And that is clearly what's going on here right now. And this is why. This is world corn supply and usage. So the blue line represents the amount of corn that gets used in the world every year. And the orange bars represent production. And what's really important to see is right here. You'll notice this year, 2024, last year we were just about dead on. We used about as much corn as we grew. But this year, we're actually going to use more corn than we grew, right? So the world is deficit corn at the moment. We're actually going to grind into ending stocks in order to get through. And so the market has to accomplish a couple of really important things here. One is the price of corn over the next 6 or 8 weeks has to convince guys like me and you that we want to grow more corn, right? We can't get by on 90 million acres of corn in the US and 3 million acres of corn in Canada this coming year. There's been a little bit of excitement recently because there's some problems with the safrinha, so the winter corn crop in Brazil has not been planted on time. So that's potentially a problem. The price has to increase demand, and so that's the rally that we're going to work on here. You can use, this is kind of a complicated tool, and I'd be happy to share any of these slides if you want to any of this stuff later, because it's a lot to look at right now, just catch me in the hallway or wherever, and I'd be happy to share any or all of this with anybody who wants to see it. But this is basically how to use stocks to predict price. So, oh yeah, I gotta hit the right button here. This is average price of corn, this green line. The red bars are the stocks to use ratio. And so what you can do is you can see on years where the bars are very tall, the prices are low. On years where the bars are very short, the line price is high. So as you get updated crop reports, so the USDA comes out and says, oh, stocks to use ratio is going to be, X, you can come across and look at previous years where that happened, right? The market works. Basically, you just study history, right? It's the same as a weather forecast, right? We know that if it's September and there's a tropical storm brewing down in the Gulf of, I don't know what to call it anymore, and it's headed this way, right? It's coming up the eastern seaboard. People in Atlantic Canada know it will rain in about 3 days, right? That's what happens when this happens, right? And you can use these historical tools, right, to predict price, to use that to set targets. We're not going to see the corn prices that we saw 2 or 3 years ago, but I think we're going to make a big comeback, or not the 4 or 5 years ago prices, but I think we're going to make a big comeback here in the next few weeks. The other thing about price is that historically, it does very similar things year to year. So this is what we call seasonality. This chart has corn futures for the last 22 years, all averaged together. So this is December corn prices. The months are across the bottom, January, February, along, and it's an increase in price. So I keep wanting to point at the screen with the clicker. Here, there's 2% price increase, 3%. So what you can see here is that through the spring or the winter, corn prices sneak up, right? Partly it's we're coming off in January, February, we're coming off the harvest low. As we get into February and March, and this is the rally that we're moving into now, the market's got to buy acres, right? We're still in this, the fine-tuning stages of figuring out our planting intentions for the coming spring. Most guys have ordered a bunch of seed or have a pretty good plan, but there's always 1 or 2 fields in play, right? And that's that 1 or 2 or 3% acreage difference that can make a big difference on supply and demand. And so we get this run up, and then it usually peters out just about the time we get the USDA's seeding intentions report, right? That sort of buying the acres rally is over. And then the real fun of farming begins, where we actually got to get the crop in the ground. And so the weather market, is planting progress. Is it moving along well? What about flooding? What about frost scares? What about, right? And we all worry a lot about the crop as it emerges. And then you get to mid to late June, and all of a sudden all the corn's up. It's most of the way to your knees. It's turning dark green, and everybody just relaxes, right? And so that's what happens here. You'll see right around July the 1st. We used to joke that in Chicago Board of Trade, the traders go home for the long weekend and they drive across the country and they see corn and the market falls apart. The lesson I would say to people in this room is, if you're not, in terms of marketing, if you haven't finished selling your 2024 crop by Canada Day, and if you're not about half sold your 2025 crop by Canada Day, give it to your wife to do, because we need to get a grown-up in charge, right? The corn market does this every year. It goes to crap in the summertime, and if you hang on, you miss it, right? And what it really is because the risk of the crop not making it diminishes as the growing season goes along. And I know certainly if you're in Atlantic Canada, you're right on the north fringe of the Corn Belt anyway, so the risk of the crop not making it is whether it black layers before it freezes, right? That's a real thing. But if you're in most of the U.S. Corn Belt, right, quite often harvest corn that never froze. And so, as you get to the point where the crop's in the ground, it's developing, it's looking good, the risk falls out of it. So we're really in a 3-month window right now where you're going to get your best shot at contracting, especially at forward contracting. There's pretty good carry in the corn futures, so you can lock in new crop values for harvest and that kind of stuff. That's sort of key. Moving on to wheat, which there should be more of in this part of the world. This is U.S. wheat production, and U.S. wheat production the last 3 or 4 years has been sneaking up, right? They've been growing more wheat in the United States. I don't like when you get wheat as one thing all in one chart, because wheat is actually 5 different crops, right? It's hard red spring, hard red winter, soft red, soft white, and durum. I would assume in this room we've got hard red spring and soft red winter. Is there any hard red winter in? Well, hard to tell. There's no durum, I'm sure of that. Durum is a desert grass. This is U.S. wheat production for the last few years, and the important part I want to draw your attention to, the green bars represent last year's stocks. So in hard red winter, we've got more, the green bar is the tallest, in hard red spring. So the Americans grew a pretty good sized wheat crop last year, and in terms of the North American wheat supply, there's plenty around relative to demand. But this is worldwide wheat production here. Same as the chart I had for corn, only it's different colors. The blue bars is the total amount of wheat produced. The black line is total wheat consumption. And if you look at the last 5 years here in the world, there's only 1 year where we actually produced as much wheat as we used. The 2 before it and the 2 after it, we are consuming wheat faster than we're growing it. And you could say that 1 year where it looks like, it wasn't enough of a surplus to even catch up, right? So the world has 8.2 billion people in it. As far as I can tell, at least 8.1 billion of them like to eat. The other billion are on Jenny Craig. And so there's solid demand under this for wheat. Now, this chart is a little complicated, but it talks about the countries in the world that are the biggest wheat exporters. And when you have a world that's deficit wheat in some areas, what the exporters have to sell is critical. Just a talking point, if you're interested, the 2 biggest wheat producing countries in the world are China and India. But they are also the 2 biggest populations in the world, and so they don't export any wheat. It actually makes sense, right? If you can grow a lot of food, you have a lot of people. And Canada, by the way, Canada is 9th in terms of world wheat production, and we're right behind Pakistan, which is in number 8, right? We go to school in Canada and they talk about these wheat fields from coast to coast. We aren't much, really. Now, in terms of exporters, we make the list. This is the biggest 8 wheat exporting countries in the world. So you have Argentina, Australia, Canada, the European Union, Kazakhstan, Russia, and the United States. And what's really important to us as Canadian wheat producers is you'll notice only 2 of those countries are in the southern hemisphere, right? So Australia and Argentina are the only 2 that's weather is opposite to us. The majority of the big wheat producers in the world, the European Union, the Russians, Canada, the United States, we all have spring at the same time, right? And when does wheat die? In the spring, right? We have the majority of the wheat is winter wheat. France grows soft red. Ukraine and Russia grow hard red winter. Canada and the United States grow both. But the most critical period when the wheat crop is the most vulnerable to weather is between now and whenever all the snow melts, right? That's where it floods, it freezes, ice, all these things happen. How many guys sold wheat last April? Right? Chicago wheat futures were over $9 last April. They're $5.50 most of the time, right? I have a whole stack of farmers who got $300 for soft red for harvest delivery this year, right? Because we stepped up on that. And what was going on? Well, you were into that period where it was too cold in Kansas, it was too dry in Ukraine, it was too wet in France, and we're moving into that cycle again. If you watch the wheat futures, 6 weeks ago they were $5.30, yesterday they hit $6, right? 70-cent run, almost 15% rise in wheat futures because we're in this cycle now where we're going to collectively worry about whether the wheat is dead until it turns green and starts to tiller and spread out, right, and fill in the field. Now, again, you're right on the north edge of it, right? The crop in Missouri will look winter wheat in Missouri will be green before the snow is off the fields in PEI. I'm fairly certain of that. there's certainly a lot to be worried about. In southern Ontario where I farm, we got a foot of snow on Sunday, followed by 8 inches on Monday. So your low fields are already a flood risk, right? I mean, when this melts, she's going somewhere. But this is the reason why wheat has a really lively market in the spring. This is why we're really worried about it. The last 7 consecutive months, the area from Ukraine, Romania, and Western Russia has had the driest month on record. So their soil moisture is not good. Now, January, February, March, if your wheat is dormant under snow, drought is not a big issue. But if when it starts to break dormancy and grow in the spring, it doesn't start to rain, we got some stuff going on. This is U.S. Soft red wheat production. The interesting part about this is Canada made the chart. See, we shipped them 200,000 tons of soft red last year, about 100,000 this year. This is why tariffs won't matter to the grains and oilseeds business, because we don't ship any amount of grain to the U.S. I'm going to skip past this. This is Ontario wheat production for the last couple of years. But I don't know about this part of the world, but in Ontario, we had a really good open fall last October. We combined soybeans fast. We planted winter wheat like crazy. We're back up over 1 million acres of soft red. That's what we do. We love planting wheat in the fall, right? Until the weather chases us out of the field, it looks like a good thing to do. We didn't export as much last fall as we probably should have, because there was big carries to store wheat. And so people put the wheat away. That means it's coming out in the spring, right? So expect to see big export movement of Eastern Canadian soft reds heading out the river as soon as the seaway opens up. So April, May, should be just a conga line of boats coming out full of wheat. Soybeans is different. In terms of both wheat and corn, the world is consuming more than we're producing. And part of the reason is because we're producing a lot of soybeans. This is U.S. soybean production, and the Americans had a very ho-hum average year last year in terms of soybean production. This is how the Americans use soybeans. Basically, the yellow is export sales, the orange is the domestic crush, and the blue is they either fed it or used it for seed. And by fed, I mean like roasted and that kind of stuff. It's getting to be a pretty small bit of the business. But you can see, basically you crush them or you move them. That's the exact same situation we're in Canada. In Ontario, we have 2 crush plants, Windsor and Hamilton. I imagine from this part of the world, beans flow back to Bécancour. Am I right? Except when they're on strike? Yeah. This is worldwide soybean production, and this is the issue with soybeans. Unlike corn and wheat, we are way ahead, right? We've produced, the blue line is consumption, and production is ahead of demand. And so that tells us to handle our marketing situation in a different way, right? If your plan is to hang on to soybeans until they get scarce, you will need a chair, maybe a hammock, maybe a pillow. She's going to be a long wait. This is where the world's soybeans are produced. The blue slice is the U.S. The red one is Argentina. The green, or Brazil. The green slice is Argentina. I put Canada in there on the top where that little narrow 2% slice. What's really important about global soybean production is that it is grown in the Americas. So North America and South America, and almost nowhere else. If you look at those other countries that produce significant amount of soybeans, they're places like Paraguay, Uruguay, Chile. You're not going to find them almost anywhere else in the world. And so we have 2 major cycles in soybean production. There's when we trade North American weather and when we trade South American weather. This is Brazilian soybean production. This is a USDA slide. It's the last 10 years. This is the problem with world soybean supplies right now. And it's in hectares, but if you look, Brazil, 10, 15 years ago was running around 32 to 35 million hectares of soybeans, and they have been going up at about 2.5 million acres a year more soybeans. So Brazil's soybean area increases by about Canada's entire production every year, right? This year's crop is going to be about 13% bigger than their 5-year average. I don't know where they got all the land from. I'm not going to wade into that. I think we should lobby them to fence it off and pasture sheep. That would be, get them distracted by doing something else. Their yields at, 3.5 tons per hectare is about 52 bushels an acre, so very similar to the US, but their expansion pace is massive. Argentina is actually not going up at all. So this is a made in Brazil thing. Argentina produces about the same amount of soybeans now as it did 5 or 10 years ago. Argentina has much more diversified crop agriculture. They grow corn, they grow wheat, they grow soybeans, they can shift acres around. So if corn prices go on a bit of a run this year, they could drop their soybean acreage, pick up on wheat. There was a La Nina event this winter. Generally, when you have a La Nina, it gets dry in southern Brazil and northern Argentina. That happened this year. So Argentinian yields are a little lower. Southern Brazilian yields are a little lower. But there's going to be beans everywhere. The seasonality in beans, certainly we run up in the spring while we're worried about planting. The second big run up is over here, which is actually South American planting. So we have this, which is kind of North America worried about spring, and this, which is South America worried. I think I should not be allowed to drive a pointer, should I? That guy is all over the road. No. Anyway, that's the cycle we're in. So what I would suggest is we want to be really careful in terms of marketing soybeans. You want to be a lot more aggressive, get out in front of it. Certainly in my part of the world, we've popped to $14 a bushel on new crop a few times. We get on that, you just hit it like a fat kid hits a Smartie, right? That's the number, and go. This is where the world's soybeans are produced and where they go. So the chart on the left shows you world soybean production. The yellow is the United States, which is fairly stable, and the blue part of that graph is Brazil, and you can see it is growing at a ridiculous pace. The graph on the right-hand side is who buys the world's soybeans, and that great big green blob is China. 25 years ago, China hardly bought any soybeans. Now China buys more than half of the world's soybeans end up in China. And so the health of the Chinese economy is critical to soybean pricing. If they're buying, we're good. If they slow down, it's problematic. They have shifted their buying behavior to Brazil and to South America due to some trade issues with our neighbors. That's not really a problem, because if Brazil and Argentina's soybeans go to China, then the North American soybeans to go to wherever Brazil and Argentina's beans didn't go, right? You simply scramble the logistics model. You still have 350 million tons of beans in the world. You still have 8.2 billion people to eat them. And all the tariff and trade issues is just a matter of scrambling the logistics model. The thing that is potentially problematic, the last USDA report, their World Agricultural Supply and Demand Estimate put soybean carryouts, global soybean carryouts on September the 1st of 2025, so at the end of this growing season, will be about 100 million metric tons. That's almost an entire year's worth of U.S. crop. So you would have almost an entire U.S. crop left over at the end of the consumption year. It wouldn't all be in the U.S., but I mean, to give you an idea on size, right? And so that's why I think we want to be fairly aggressive on soybeans. Kind of your price predictor chart for where we could be, but we're likely going to trade the average price of 25 soybeans is going to come in under $13 a bushel. So opportunities to get sales above that, and we'd have to kind of basis correct it for Eastern Canada, but it would suggest that being fairly aggressive marketing would be helpful. Now here's the one kink in what soybeans could be worth. This is the Canadian dollar for the last year. And if you were looking at the Canadian dollar on the 1st of January in 2024, it was about 75.5 cents, 75.44. And at the end of 2024, it was 69.5 cents. So we dropped about 6 cents out of the Canadian dollar in the year. And so I don't know how many of you guys are familiar with US basis trading, but this is Hamilton, Ontario, so the crush plant in Hamilton. Their price for soybeans, and I just using the same price but changed the currency. So if soybeans are worth 10.20 US, which is like 30 under, and the futures are or 40 under, and the futures are 10.60. On a 75-cent dollar, soybeans are worth $13.52. On a 69-cent dollar, they're worth $14.66, right? So the change in the Canadian dollar, the decline in the Canadian dollar over the last year added $1 a bushel to the price of soybeans. And when we started into the tariff threats, I thought, well, now the Canadian dollar could drop to like 66 cents or something like that, right? Which would add another 75 cents or $1 to the Canadian dollar cash price of soybeans, right? Now, curiously enough, it hasn't happened, right? The Canadian dollar is actually up from the 20th of January, which might be a limited time offer. But one of your best ways to lock in on currency is going to be using soybean sales, or at least be aware that if the dollar starts to dip, that might also create a selling opportunity for grains and oilseeds because they all really trade in US dollar values. The Canadian dollar should be, if you look at interest rates and compare it to the US, our overnight rate in the US is 4.3, overnight rate in Canada is 3.2, so their interest rates are higher. Their GDP growth rate is higher. Their unemployment levels are lower. The Canadian dollar belongs right around 69, right? We're not apt to rally much from here unless the Canadian dollar, or unless we have A, tariffs, or B, the Canadian dollar drops. In terms of selling opportunities, there's really, really good carry in the futures market. If you can forward sell your storage, this is a screenshot of the screen on my desk, right? This is wheat futures. One day I just took a shot of it because it's kind of interesting. A couple of fun things here. Everybody, when you hear market reports, you ever listen to people talking about the spec funds, like where the funds are at in the marketplace, right? And I don't know about you, but I've always thought, I grew up watching the Muppets, right? The funds must be like Waldorf and Statler, the two old guys in the box with all the money, and they're just sitting there talking about stuff. This is wheat futures, and the most important thing is not the price, it's volume and open interest, right? So if you look at the volume, this is March wheat on that day. On that single session, they traded 77,215 contracts, right? 77,215 times 5,000 bushels is 25 million tons. So on that single session, the March futures in Chicago traded 25 million tons of wheat, soft red wheat. North America only grows 12 million tons of soft red wheat. So the funds traded the entire crop twice in one day. It is the world's biggest casino. You ain't seen Vegas till you go to Chicago, right? The other thing that's really interesting when they talk about whether the funds are buying or selling, right? Total volume in there is the volume is 72,000. Yeah, open interest is 180, right? So the total amount of people, open interest refers to the number of people who have bought futures and need to sell them, or the number of people who have sold futures and need to buy them, right? So it's the total amount of position that has to be closed out. And it's only 180,000. So the funds, if you're trading 77,000 a day and there's only 180,000 in there, the average dwell time of the money is just a smidge over 2 days, right? So they're in, they're out, they're in, they're out. So there's this illusion in agriculture that the funds come in, bunch of guys slop their money down and then go away for the weekend. The majority of the trading in the Board of Trade is computer algorithm trades, trading as fast as they can, and they're turning over the money at an incredible speed, right? They are both the biggest buyer and the biggest seller. The opportunity for us as farmers is that those computers don't understand agronomy, right? And so sometimes something happens, like there was a frost in Idaho, right? And all of a sudden price takes off, and then you realize, wow, they don't even grow our kind of wheat in Idaho, right? But it takes those guys a couple of days to figure it out. So as long as we know. The other thing, how many people here use open orders or market orders, triggered grain pricing orders, right? You put those in because the computers trade all night. Chicago trades 22 hours a day, right? And there are no people watching the computers in the night. And so, I load up pricing orders for guys all the time. They almost always come in the morning. I'll have a text from the trading house telling me what filled in the night, right? And that is the best way to do it. The other reason it is when the market, we talked about those seasonal volatility there early on. It happened to be when you were planting, right? April, May. How many guys want to sit in front of a computer screen on the 12th of May? Well, unless if it's the planter monitor in the tractor, sure, but otherwise, no, right? And so the other thing, you just put it in and go away and leave it. It'll also stop you from canceling it when it gets close, which is, the kiss of death, right? This is just, to bring us back to the key things. This is worldwide wheat and worldwide corn, or worldwide corn and worldwide soybeans, production versus consumption, right? So corn, we got a lot of upside because the world needs us. First of all, we have to ration whatever's left of this year's corn crop, and second of all, the market has to tease us into planting more corn. The other thing with soybeans, where we're clearly producing more soybeans than we really need, that doesn't mean not to grow soybeans. I'm still planting my 200 acres of soybeans that I plant every year, but I'm going to be a lot more interested in having a lot more of it forward sold. If I can lock in a profit, then it's up to somebody else when they figure out there's too many of these things around, right? So we just have to be more aggressive in terms of marketing some crops and less aggressive in terms of marketing other ones. This one I just threw in. This is pictures from our grain elevator back home. And one of the things that we always struggled with when I was working with Wayne and Harold and those guys was, what do we do with grain in Atlantic Canada, right? And corn, certainly there's more feed demand in these three provinces than there is corn produced, right? So you've got a stay-at-home market. You could double corn production in this part of the world, and the livestock here would still eat it, right? In fact, all you would do was stop the rail cars coming from Ontario, and I used to be that guy. He's not worth sticking up for. So, there's really good opportunity. But what we do, one of the things we do at our elevator is we export grain in ocean boxes. Has anybody here done this? We ship about between 6,000 and 6,500 tons a year of grain out in ocean containers. Ontario itself ships about 400,000 tons of grain a year in ocean containers. I think if we took 400,000 tons of grain out of New Brunswick, there wouldn't be any left for a decade. So, and what's really interesting, when we're billing these rail cars, about a quarter of them go to Halifax. So there's about 100,000 tons of Ontario grain every year that departs Canada via Halifax. So unless the Canadian National Railroad is a charity which moves stuff for free, your grain is worth more because it's closer to Halifax. And I'm making an assumption about the railroad, but not really, right? So I think this is something that would really work well in this part of the world. It's kind of a nifty thing to do. There's a couple of things you have to learn to do as a producer. First of all, if you're going to sell internationally, you have to sell specs and not grades, right? Nobody cares that it's number 2 Canadian Eastern soft red wheat because that doesn't mean anything, right? But if you can sell a 9% protein, 300 falling number, max 2 VOM, that means something to people the world over. They buy specifications, not grades. All you have to do is learn how to test first, figure out exactly what you got, and then represent it as exactly what it is. The second thing I would suggest to people is find somebody in Canada to do the selling for you. I have a rule: you never do business with anybody you can't take to a Canadian court, right? You could find somebody on the internet who might buy your stuff, but if it gets to Malaysia and they didn't pay you, problem, right? So finding good Canadian outfits, and there's several of them, 4, 5, 6 companies that would be happy, I think, to position stocks in this part of the world and kick them out. You need to be real friendly with the CFIA because at the point you start loading containers, you are an exporter. So you have to do all the phytosanitary testing and all that kind of stuff. Not doing that would be a serious problem. It's a little bit like running a trucking company without licensing, plating, or safetying any of your trucks, right? It'd be good till somebody looked, right? So that's one of the things that you'd have to get on top of. But yeah, I think as long as you don't mind doing paperwork, this is a really, really neat opportunity. I think it'll work perfect relative to crop size because, and I mentioned earlier on, back in, I think it was 07 or 08, we exported a bulk vessel of barley out of Halifax and it sailed in September. I don't know if anybody in this room's barley was on that, but that was pretty hair-raising because we had to get 25,000 tons of barley into Halifax all at once, right? So if everybody didn't want to participate, I was going to be screwed with a half-full boat, right? And so thanks to Wayne and Harold and a whole bunch of Brennan Farms trucks and stuff. We got it there and we got it out, but we never tried it again. So if, by doing containers, you can do 200, 500, 1,000-ton chunks, and finding smaller quantities of similar kind of material really opens up a lot of runway for people in order to be able to do this. And it's not super duper complicated. At least if I'm smart enough to do it, Well, actually, I'm smart enough that we're doing 18 containers at home today, and I'm here. So I'm afraid I owe some guys a favor when I get back. Anyways, there's my phone number. So if you think of something you want to talk to me about, or you want the slides or anything else, feel free to copy it down. And I'm happy to be accessible on any of that stuff. Does anybody have any questions? We covered everything from container logistics to Chinese soybean imports in 40 minutes. So, yes, sir.
Where does your soft red going to from Ontario? Where are you exporting?
In containers, almost all of it goes to Vietnam. Yeah, and almost all of it sails out of Halifax.
And they're using it for production?
I couldn't even tell you, but I would assume so. Soft wheats are a pretty limited group of things that you can use it for. It would be some kind of a batter or that kind of thing. Yeah. Yep.
Steve,
Yep.
great presentation. Eric Richter up here.
Yep.
Nice to see you.
Can you tell I'm blind?
I have a question in regards to the corn crop and the soybean crop globally. Is it fair to say that corn is viewed as a crop that supplies the food, feed, and fuel market, where soybeans is sort of locked in still for the most part into food and feed, not fuel, with the whole biodiesel challenges?
Yeah, I would say you're 100% right. Corn fits everywhere, right? One of the biggest users of corn in Ontario is a company called Ingredion. They use about 650 acres of corn a day, and they make high fructose corn syrup, right? Who knew, right? So there's demand for corn in a wide variety of things. The only growth market for soybean oil is biodiesel, and there's a whole bunch of other ways to get oil that's cheaper, right? So in the United States, where this legislation leads you to soy biodiesel, in the rest of the world, I'm not 100% sure that that's going to catch on. So there's a lot more opportunities to grow out the footprint of uses for corn. And certainly another thing is that in parts of the world where eating meat was traditionally a luxury item, as those people's incomes improve and their lifestyles improve, getting to eat pork and beef and things like that is a big, it's something they enjoy doing. It's a luxury that's now affordable, and it takes corn to do that too. So the corn market is nowhere near capped out, whereas with soybeans, unless we invent something new to use the stuff for, we're probably getting near the top at today's current global production.
Hi, just quick over here.
Yep.
Quick question about, it's very hard to predict what's going on in the United States by an hour-by-hour basis, but
Yep.
there's seems to be two competing messages coming out of the administration about, they want to support agriculture, they want to support fuel independence, but then they've also put in a new human health and services guy who's like anti-big ag, anti-food additives, all that sort of stuff. So are you seeing that manifest in volatility in the market in terms of some of these sort of things, or where do you kind of see that going?
I think that you're right about the U.S. administration. I don't think they're all dancing off the same song sheet, right? It's really interesting to watch. And a little bit worrisome. And I've said, I think it's an opportunity for Canada. And the reason I say that is because if they offend more people, the fact that we're not American is helpful, right? And I go back to, I was at P&H in 2018, and the Americans put a big tariff on Chinese manufactured goods coming into the United States. So China put $1.25 a bushel tariff on American soybeans. And we were loading boats in Hamilton, and we could not find enough beans fast enough, right? because the Chinese market was huge and we weren't American, right? And it had just opened up in front of us. And so if that wants to happen again, I am a big fan, right? In terms of what happens with renewable fuel in the US, their agriculture, remember that corn chart, I could back up to it, right? But it is the biggest single user of corn in the United States. And I got to assume the Farm Belt senators have a little private meeting down a hallway in the White House and go, whoa, time out, right? They can say a lot of things, but when it comes to putting pen to paper, backing away from biofuels will be economically devastating in red states. So I think he might not be the first politician who says one thing and does something else. Hate to think he's revolutionary like that, but we've got a few of them out there, right? And so I just can't imagine they would inflict that kind of damage on their own rural economy by screwing around with it. The worry could be problematic for the market, but to actually do it would be like shooting yourself in the foot to scare off a stranger, right?
Steve, I have another question on it's relative to a crop, of course, we don't grow, but it's one of the top 3 globally. And can it impact where wheat goes? What's going on with rice then, right now? Does it make sense? What's going, in your opinion, where's that at?
I don't trade rice, so.
But the price is starting to move.
Yeah.
There's some crazy stuff happening with rice. Could it impact wheat as well as the backup in a way?
Maybe in a way, all the carbohydrate grains, so barley, corn, wheat, they all kind of move together because their usages are connected. But the end use products don't overlap at all.
Okay.
So,
Okay.
and I've never heard of people feeding rice, although you probably could. But no, I don't think it'll mess up the wheat business. I think we've got 3, maybe 4 weeks of really good fun in the wheat business here while we worry about how much of it's dead. And all of us need to participate in that. And I mean, not participate in the worry, but participate in marketing it. And then we should be set up for another, and 26 crop wheat. Like, that stuff is over $300. So don't be shy about leaning in there and getting a piece of that, even though you haven't planted it yet, right? There's some really good opportunities out there as well. I got the hook?
Yep. Thanks, Steve. Thanks a lot. Very nice.